My name is Tuan Mara Elizabethino. Assalamualaikum. We are from the IA4D. Want to talk about one of the topic in financial accounting for, which is introduction to company. A company is a legal entity formed by a group of individuals to operate a business in commercial or industrial. Company in Malaysia are those entities incorporated under the Companies Act 2016 or under the previous Companies Act 1965.
Assalamualaikum warahmatullahi wabarakatuh. My name is Shazan Wanadira binti Muhammad Soha. There are three classifications of company based on Companies Act 2016. First is company limited by shares. As the name suggests, a company is limited by shares if the liability of its member is limited to the amount, if any, unpaid on shares held by the members. A company limited by shares can either be private company or a public company. Second, company limited by guarantee. Company limited by guarantee is defined under the CA 2016 as a company formed on the principle of having the liability of its members limited by the Constitution to such amount as the members may respectively undertake to contribute the asset of the company in the level of it being wound up. And the last one is unlimited company. A company is an unlimited company if there is no limit on the liability of its member. An unlimited company shall either be a private company or a public company. Next, types of companies in Malaysia. First, sole proprietorship. The sole proprietorship type of business entity is one of the simplest and cheapest form of business entities to form. Second, partnership. A Malaysia company partnership is worked in a similar way to the sole proprietorship concept. The only thing that differentiates between the two entities is the number of ownership. Third is limited liability partnership, also known as LLP. The LLP business entity is a mix of a private limited company and a partnership company. Next, private limited company, commonly known as Sdn Bhd. It is the most common type of business entity in Malaysia because of it has a separate legal entity and it can acquire assets. Next, public limited company, also known as Berhad. This type of business entity usually involves the company being listed and governed by the Securities Commission of Malaysia. Next, companies limited by guarantee. This business entity involves the liability of the members being limited to the amount which the members have undertaken or guaranteed to contribute. And the last one is foreign companies. This company business entity is equivalent to a foreign branch in Malaysia. The branch office would usually be registered as an extension of the parent company. It's also a separate legal entity.
Registration requirement based on Companies Commission of Malaysia is Malaysia citizen or permanent resident of Malaysia. Secondly, foreign must have work visa or ownership visa to apply. Thirdly, individual must be above 18 years in age. 4 is business registration must be completed within 30 days from the starting day of the registration. And lastly, must be with a legal authority and follow the law, or likely is be not used for unlawful purposes. Thank you.
Assalamualaikum, I am Nurul Shahira binti Ainuddin. Today I will discuss about financial reporting requirement under the Company Act 2016 and the Financial Reporting Act 1997. First of all, under Companies Act 2016, in section 249, clause 1, specifies that the annual financial statement for a financial year shall give a true and fair view of the financial position as at the end of financial year and the financial performance for the financial year of the company. Similarly, with section 249, clause 2, clause A, and section 249, clause 2, clause B. Under section 249, clause 4, specifies that the financial statement shall contain in the notes to the statement the information as the registrar may determine and may include but not limited into the following: the director's remuneration, the director's retirement benefits, compensation to directors of loss of office, loans, quasi loans, and other dealing in favour of directors. Lastly, the total of amount paid or to receivable by the auditor as remuneration for their services as auditors. Next, Financial Reporting Act 1997 in section 27 deals with compliance with approved accounting standard of the Malaysian Accounting Standard Board (MASB). It requires that where financial statements are required to be prepared or lodged under any law administered by the Security Commissions, the Central Bank, or the Registrar of Companies, an approved accounting standard has been issued or adopted by the MASB. Such financial statements shall be deemed not to have complete with the requirement of such law unless they have been prepared and are kept in accordance with the approved accounting standard. Under section 7, clause 3, explain that approved accounting standards issued or adopted by the MASB apply to any published accounts of a commercial, industrial, or business entity in Malaysia and of overseas subsidiaries and associated corporations where those accounts are to be incorporated in consolidated accounts in Malaysia. Accordingly, it is statutory duty of directors and management of reporting companies and other business, industrial or commercial entities to ensure that the financial statement of their respective companies or entities comply with approved accounting standard of MASB.
Alright, next, elements of annual report. There are 4 basic overview of the company over the past year. Firstly is chairman letter, second business profile, third a management analysis, and fourth financial statement or data. So chairman letter, generally the first part of annual report. The chairman letter will provide an analysis of overall business performance, insight into the market it's in, and any opportunity for growth. So basically the letter often ends by giving a sense of corporate direction for the next year. Next, business profile. Describe the company about to generate revenue, its product or service, its operation, the market it is competent in, and the risk factors for the business. So major change made in the past year are also highlighted, such as new product, sales, marketing, shift, new service, and other than that. So next, a management analysis. Under management analysis, discuss the company operation in detail. Management will compare this year's result to result from the past. Will often use charts and graphs to highlight the most important data. Next, financial statement or data. What means of the report without number, right? So the financial statement usually companies will include the consolidated balance sheet, the income statement, the statement of cash flow, and the statement of shareholders. But some companies also will include more financial information depending on their industry and size.
The first requirement of a Bursa Malaysia Securities Berhad is preliminary statement of results within 6 months following the end of the financial year, which means every half year a company have to give their early statement of result to the Bursa Malaysia Securities Berhad. Next is listed company need to issue half-year reports regarding their performance within the 3 months following the end of the half year.
Okay. Advantages conversion from partnership to company. First, automatic transfer of the asset and liability of the firms can immediately before the conversion become the assets and liability of the company. Next, no stamp duty. All movable and immovable properties of the firm automatically vest in the company. No instrument of transfer is required to be executed, and hence no stamp duty is required to be paid.
So here is the advantages of change partnership to company from business. So it is the ability to transfer shares. So shareholders can sell their share for any reason, especially if the company is not profitable as they would hope. Even though shares are changing hands, the business will still go on.
Advantage of partnership change to the company is debt and bankruptcy not affected the company. Disadvantage is reporting requirement can be complex.
Advantage is liability protection. Shareholders do not risk losing personal asset because of company debts. As the corporation are considered separate legal entity from their company. While the disadvantage is in terms of restrictions. Compared to proprietorship or partnership, a company has to comply with more legal requirements. It consumes considerable effort.
Other disadvantage is hard to form. This is because need to be registered with the register of company as a company under the CA. Furthermore, the registration fee is expensive than the partnership and sole traders.
Alright, next is disadvantages if the partnership want to change to company from business. It is associated costs. The startup costs associated with an LLC are more expensive than the partnership. And there are annual fees involved as well. So that's why when partnership want to change the company, they need to have high costs as well.
Next, the difference element disclosed in financial statement in the company business is their equity section. The equity section of a corporate balance sheet has two main sections, which is contributed capital and retained earning. While in partnership business, equity section of a partnership balance sheet has a separate set of entry for every partner. In a typical setup, each partner has a capital account and current account. That's all. Thank you.
The element disclosure between company business and partnership business refers to the profit. So company business, their profit will belong to the corporation, while partnership business, their profit will distributed to the partner's capital account according to partners ratio. They are agreed. Alright?
The characteristic of sole trader is only have one capital account. However, partnership have more than one capital account.
In conclusion, through this assignment, we can gain more knowledge about companies And we can also differentiate elements in financial statements between company business, partnership, and sole traders. That's all from us. Thank you.